In this video, traders, let's look at a large gap trading strategy. Stay tuned. Hey guys, warm welcome to you. All right, so I've noticed this strategy appearing, or setup should I say, appearing a few times in the market in the current conditions. Now, as with all these type of things, I'm not suggesting that you can go out and use these and they're going to be effective for you, but what I am saying is they're worth a little bit more exploration. You know, when I talk about strategies and setups and stuff, the idea is that you say, okay, that's interesting, and it's a seed of an idea for you to go away and maybe develop it a little bit further and see if it's got any mileage, work out where the risk reward structure fits in with the way you trade, work out if it's feasible for the market you trade, all this type of stuff. So just bringing these to your attention, guys. There's no kind of advice here or anything like that. So large gap trading strategy. Often we get this scenario where we have a big gap. And I'm obviously going to trade an instrument that has a gap. So I'm talking about the cash session for, let's say, NASDAQ or Dow or S&P or DAX or a stock or something that's got a specific close, and you can see the close to the open difference, which is your gap. Okay, so very often when we get a large gap, people are trying to trade for the gap fill because there's general this thing and feeling of, you know, gaps always filling. There's statistics out there that suggest that's the case. But I think, again, opinion, is that in current conditions, when you've got a lot of sentiment in one way, that actually that tends to, if the trend is high or strong in one direction on the higher time frame chart, that tends to, depending on a lot of other factors we'll talk about in a moment, have the overweight pressure more than the desire to fill the gap, if that makes sense. That tends to lean more towards that than the gap. So if we are in a big downtrend on daily chart and we get a further gap lower, careful it's not exhaustion. You know, so say it's just like a breakout of a move that's been channeling for a while, push lower, channel on the daily, then gap through the channel. That's the type of thing, big gap, where the weight of the higher time frame is far more pressure than the desire for the market to fill gaps. If we've been going down lower, 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 you know, we're really stretched and then we do a massive gap, be careful of that, because sometimes that's exhaustion. But let's talk about this strategy. So often we have this, we gap lower in the direction of the trend. At the moment the trend's down, but imagine it's the other way. Sometimes we had it, you know, several months ago, almost a year ago now, where we were gapping to the upside and this was happening to the other way around. Again, it's not always going to work, but it's, you know, something to explore. We get the open and we try and push up, so it looks like it's reasonably strong, and we get this kind of chunk off the open, it's chug, 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 and it starts to fill the gap. And then we often get a stall, it pulls back, and now this is where it gets interesting, because most people are kind of buying that pullback saying, yeah, gap fill, gap fill, gap fill, and then the second leg up is often where we fail. So this scenario here, I hope you can see what I've drawn there. I'll add a little bit here. So you kind of got this kind of drive off the open, hits a high, looks like it's about to go, and then we sometimes get this, right? We sometimes get this, which is nice, because what we're trying to do then is if we're going to get a short position on, we can structure the trade well, and we can say, hey, it's turned down from here. I'm going to initiate the short through there. My stop is going to be here, and my target is going to be at least the low of the day before, if not the ATR expectation for the day. So if you're expecting 300 points, then you kind of maybe look 50% of that, or whatever the case may be. But very often, because the supply and demand and sentiment has shifted so much, then everyone goes, oh, off we go, and it's chugging, chugging, chugging. It looks like it's filling the gap, and then it reverses, or starts to reverse after the opening 15 minutes, maybe even a little bit longer, and the true trend starts to take place. It can be a nice opportunity to get involved, because everyone thinks the gap is going to fill, and really the bigger sentiment is suddenly coming back into play, and people are just suddenly pushing it, because there's a lot of bargain hunters going, oh, I'm buying this, I'm buying this, yeah, I'm right, but they're very sensitive to price movement, and when it starts to fail and fail and fail, often when it starts to roll, they get a cascade lower, because you've got the bigger sentiment time frame who's selling because they just want to get out over the longer period, and that's just a reason. The gap lower just then added fuel to the fire. And you've got a lot of people as well who are caught long trying to trade for the gap fill, trying to catch the bottom, that are very sensitive to price and are going to come out in the downside, and often that causes a cascade lower. So what are you looking for? Big gap, drive higher, one test, never shorting that first test, coming back, retesting again, then that's where you're kind of looking for stuff. You go, okay, is there something here? And I could say, you know, this isn't always going to work for you, and just assume that it doesn't work and you go and explore it for yourself until you work out, hey, is this something that plays a part in my trading business? But it's just an observation I've had, is that second push, very often you get some kind of failure, and there can be opportunity to kind of make a decent risk versus reward trade. And especially when you get stuff like the tweezer top type thing, you might get a big kind of wick to the upside. You might get engulfing. The engulfing ones are quite nice. So you'd see these in this part here. So this bit here would be where you would see kind of any of these reversal candles. These are just examples, guys. There's been plenty of candles that are reversal patterns, and you probably know this already. If not, there's a couple of videos up there talking about these. This is kind of bolting those two things together. It's saying, okay, these are reversal patterns, and this is 3 examples, and this is a reversal pattern on a kind of chart perspective, broader, one high, second high fails, comes back straight away, and some people like to take it through the break here, which is something to consider. And then you go, right, and I'm putting it in the sentiment of a gap, which is kind of enticing a lot of buyers in. Yes, here we go, off we go, going to fill the gap. Oh no, it's not. Oh. Quick, get out. And you want to be on the side of that scramble and then judging where to come out of the trade. So large gap trading strategy, like I say, something to explore. Go back, look at the gaps in the market you trade, look at how they've performed, look at when this has worked and when it hasn't. The key to a good strategy is to recognize when it's not working, when you're going to cut your losses and move on and say, hey, it's not working. I'm not going to get caught up trying to fight this thing. I'm done. Take a small loss, look for the next trade. And so doing that analysis and looking at those things can help unveil maybe a new strategy that fits into part of your trading business. Take care, guys. Keep your risk managed. I'll see you in the next one. Bye-bye.